There, got it. So there's some issues with Zoom and their security where people are hijacking their webinars and meetings, apparently
Mm.
with just sharing inappropriate images. So if you guys see any of that, just know it's not us and the problem with Zoom. Promise we wouldn't do that to you.
Yeah,
That's
I heard
what
that
the
this
article I had
morning.
here. SpaceX actually banned it because of that.
Mm. Okay.
And also throughout the webinar, you can post questions in the Q&A. And if it's something important, we'll stop like every 10, 15, 20 minutes. We'll check out the Q&A. And whoever's not talking will probably be checking the webinar chat just to answer your questions. And you can also, if you prefer speaking to us directly, we can definitely allow you to talk and we can have a one-on-one chat about the question. Just let us know. Or you can just post in the chat pane. Either one works for
Or
us.
or just reach out to us separately and we can chat in an afternoon or an evening, or doesn't have to be today. You come up with another question tomorrow or Monday.
Yeah, absolutely. So for this webinar, this is just an outline of what we're going to talk about. We're going to introduce ourselves, tell you a little bit about our backgrounds, different types of trading, the stocks versus futures, and why we actually prefer trading futures over stocks. We're going to cover all the details that we think is necessary to cover futures, at least in the 1 to 2 hours that we have this webinar. We're going to talk about risk management, trading psychology, and then just the last 2 or 7 and 8 are going to be all about technical analysis and actually applying trading strategies based on the foundation where we're going to build upon to find trades to take.
Yeah,
Uh,
so basically, I'd like to just throw in that when we created this company, we knew we needed to create a futures course. So
mhm.
we have taken a little bit from each, I guess, class in the course, and we have taken the meat of it and tried to toss it into here. So there's more data behind probably each one of these, but we're trying to make sure that when you leave here today, you can go from not knowing anything to knowing a lot. And if we have any confusion, obviously we don't want anybody to be confused, but we will be more than happy to either solve that confusion while we're all online together, or again, like I
Mhm.
said, afterwards. So yeah.
Absolutely. After this webinar, it's definitely going to be a continued education on your part to keep learning, but we'll definitely set the foundation like Kristen's saying. And then we're
Okay.
gonna talk like our thoughts on what will make you successful at trading besides like everything else. So it'll just be our personal experience really and advice for you going forward. And then we'll talk
Totally.
about a little deal that we're doing now to help people out. We're calling it a global crisis special, but we'll talk more about that just to continue your trading education and journey. So Kristen, you're up first.
Okay, cool. I want to just also start with saying that a week ago, I was driving down the street, I think it was at night, and I did a Marco Polo with Brian, and I was just having like this epiphany, like, how can we help people? Well, at that point, there was 6 million people that had filed for unemployment. Now
Over 10,
shoot,
I think.
yeah, we're skyrocketing now. And I thought, there's people at home. I get questions all the time about trading, emails and everything. And I said, I want to do this webinar. I want to do everything. I want to create something out there for people to learn, jump in, do a Saturday morning, and blah, blah, blah. And so Brian didn't even hesitate. He's like, he's so good with me because I just throw stuff at him all the time. And he said, yeah, so we have thrown this together literally outside of our regular jobs because we're both still working in the nights on our lunch breaks and things of that sort. So I think that's good information for you guys to have, is that we do this outside of our regular our jobs and our families, and then we just threw this together in a week. But
Mm-hmm.
we're pretty proud of it, and we're pretty stoked about doing it. So yeah, I've got my kids are older now, and my son will be 22 in May, and my daughter turned 16 in November. So if you have a 16-year-old girl that's learning to drive right now, God bless us. Pray for us. We could use the extra help with that. I have been a chiropractor and self-employed for Almost 22 years. My son was born in the last 6 months of my chiropractic program. So I can always just remember how long I've been practicing and how old he is. And one of the things, the main thing that really got me into trading was living through the 2008 and 2009 financial crisis, where it really, that was about, you know, halfway into my career, and nobody warned me of this. I didn't come from a background on family members, anybody had any financial, I don't know, advice, what they were doing. I just had no clue of any of this. So I am completely self-taught from the ground up after going through the crisis and saying, okay, how can I survive that outside of chiropractic? So, you know, blue collar, white collar, whatever you want to call it. I mean, we rely on people being able to pay for their services, and, you know, people lose their jobs. So I just really dove in and have actually never looked back. And so the trading and the stock market and financing and savings and things of that sort, all the different types of trading, I like it all. So we're going to actually pick apart in a second the different types of trading, because we actually do, outside of the day trading, we do some swing trading and things of that sort. A couple things, I started with options, and so we are going to hit on what that means. If you don't know what that means, I loved them. And then I started to day trade. So I was swing trading, and then I went into day trading options. And then what happened is I started getting eaten alive by the Greeks, which is mostly theta, if you know anything about the Greeks and options. And then I learned and then dove into and started learning more about the futures contracts, which don't have the Greeks, which means they don't have the decay. So that really makes a big difference in how much money you're making and losing. So the other thing I've always loved to do is teach other people. So started with the platform of chiropractic, it can be nutrition, and now it's trading, and especially wanting to trade other teach people, other females and self-employed people that want to learn how to do this. And that's kind of how this got started. And Brian and I met through some other groups. So we figured out over the years, we've been in and out some other groups, and we trade very similarly. And then I approached him. I said, I would love to just trade with you every day and not all the other stuff happening in all the other rooms. So that's kind of how PLT got started. So go ahead and jump in about yourself, Bri.
Awesome. Yeah, so as Kristen mentioned, we met through one of the trading rooms we used to trade together in, and we ended up just connecting and hitting it off and starting PLT because we had similar goals and similar interests in helping other people that are just like us. You know, we have full-time jobs. Kristen has her chiropractic business. I work at a software company, Intuit, if you know TurboTax or QuickBooks, that's the company. And I actually started out as in the oil industry, and I met Dino actually, I think in OTC, which is a huge offshore technology conference, and worked in the oil industry after I graduated from college in ocean engineering, and then eventually taught myself software engineering because it just always clicked with me with computers, because I always wanted to move to San Diego, and that's the only types of jobs really here. And I love surfing, I love traveling, and this is definitely just the place I always wanted to be. And as you can see, there's some of those photos there. One's from Mexico, and there's my family in the top left with my dad in the middle, and my niece in her swimmies. And it's actually her 4th birthday today, and I'm supposed to be at Disney.
Aw.
So I'm pretty bummed because of the coronavirus, the travel restrictions and stuff, but it's important. We all have to be safe. But I'll be FaceTiming her most likely after this. um, and the whole way I started trading actually was because of my dad. When I was in my late teens to early 20s, he used to always hound me, like, dude, you need to save your money, you need to invest, because he used to work in the banking industry in New York, I think for Capital One, I believe. And he always used to tell me, you need to save your money, you need to invest it to grow it, blah, 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 all that stuff that you always hear, but you never want to listen to him. You never want to take the advice to heart because you're like, yeah, okay, eventually I'll do that. And then I started seeing the effects that how much money you could actually make trading, because my first experience was a lucky one, which is not the best experience in my opinion, because you don't want to really win on your first one, because then you feel invincible and you start doing eventually it catches up to you. And I think everyone can relate to that. And I got more into day trading, I would say, in February of 2018. If you guys remember that first sell-off before the U.S. and China tariffs became such a big deal and was moving the market in huge swings to the downside and upside before we
That's right.
eventually recovered. And that's actually when I started trading futures over options. For a lot of the same reasons that Kristen doesn't trade options, or at least day trade them. I still swing trade them.
Mm-hmm.
But I was fortunate enough to learn from two mentors. One had more of a scalping type methodology. He was in and out, really precise entries, really precise analysis. And another mentor was more of a position trader who build a position, hold it, and really taught me the importance of patience, waiting for your entries, and really psychology. He was a big help there. They both were, but definitely more than the first mentor, I would say. But I feel grateful to have that experience, and also to try to give back to everyone and share what I've learned with all you guys and everyone else that wants to learn how to trade.
And other mentors are like that for sure. They say the same thing because their mentors help them so much. I feel that all
Yeah,
the people we've learned from.
absolutely. And of course, that's my beautiful Brazilian girlfriend in the bottom right. Anna would kill me if I didn't mention her name. Yeah, so I've only been trading futures for a little over 2 years, and for the last year, I've been consistently profitable. It's been quite a journey to get there, and mostly we'll talk about it. It's mostly been just managing your risk, sticking to the rules, discipline, and trading psychology, like recognizing, uh, being self-aware of like what might sabotage your trading and what works, uh, what will actually help you. You know, be aware of your thoughts and your body and how it feels and stuff like that. But we'll talk more about that component of this webinar.
I'd also like to throw in there adaptation, because the volatility in the last 2 months, you have to recognize it and adapt your trading styles. But
Yeah, absolutely. I haven't traded a mini in months. I've been trading just the micros.
mm-hmm.
Okay, so we were originally going to talk about this slide towards the middle, but I think it's important to bring this up that if you're a trader, if you want to get into trading, you should treat it like a business, and to be clear that you are every person in that business. And I always have this conversation with some people that tell me that trading is gambling, and it just I always have a good argument, but it's hard to convince some people about how we approach trading is from a high probability. It's from a probability standpoint. You know, you're doing your analysis, you're identifying support and resistance, trend lines, whatever strategy you use, and you're just managing your risk. You identify a setup and it has a high probability of working. You take the trade. If it doesn't work, it doesn't work, and you have to accept that. And with gambling, the edge is never in your favor. The casinos always have a slight edge over you. So you can't really consider trading as gambling. So we're taking calculated risk based on the analysis that we do. Um, so, and I always say, and Kristen will always harp on this and say that we focus on the long-term picture, not like the day-to-day stuff. We want to always focus on what were our weekly results. More importantly, what were our monthly results? That way we don't focus on be one bad day where we hit our max loss, because it doesn't matter. We're going to bounce back. You know what I mean? And
Yeah,
yearly, you know?
yeah, I totally agree with all of that. And one of the things that I remember telling myself, and I literally stuck with it, and I was so serious about it, I tell everybody this, is I knew that when I was going to take my hard-earned money and start paying for classes, thousands of dollars back when I started. I mean, to take a Saturday class, I think I shelled out $3,000, and it was like 5 hours. And it was a game changer for me, but I always said, if I'm going to take my money that I've, holding on to for different reasons, and I'm going to put it in to learn to trade and learn about the stock market, that I was going to officially tell myself that I'm kind of doing a night school. Like, to me, the only time I had to learn about trading and consistently stay with it was my evenings and weekends. And so I have been fully committed weekends, evenings. I mean, if you're hanging out with me, I'm probably talking or texting Brian or anybody else that wants to talk about trading and constantly learning. So I knew that any 3, 2-year, 4-year program and at night, it's a commitment. And so that was my deal with myself in the mirror, was I committed myself to this. And I like to talk about that too, because it is a business, but at first you have to learn how to run the business. So that's kind of what today is the foundation and the basics of, if this is for you, if this is for you.
Yep, absolutely. So, and most businesses are typically not profitable in the first 6 months to 12 months. Takes some time.
Forget about that.
So let's jump into types of trading, just so we're all clear here for anyone that's not familiar with trading at all. So we primarily day trade the futures market. You can swing trade it. So day trading is essentially just buying and selling during the day. We're never holding positions overnight, because there is a risk of a gap down or a gap up against the position that you're holding, which is one of the cons, I would say, of swing trading. I think day trading is definitely the most risky, because, as we'll talk about, the futures market, or the futures contracts, it's just leverage that you're trading. Say that's an instrument that's tracking the S&P 500 or NASDAQ. Like with our futures broker AMP, you can trade one contract for $400. Typically, that's the margin, but nowadays it's almost the full requirement because of the volatility. And so you can control, I don't know, like say the S&P is like 3,000 right now. You're controlling like 150,000 worth of instrument for like a fraction of it. So you have to take it seriously. You have to be aware of like how much position sizing you're using, and it's very fast too. Day trading happens in seconds sometimes. Swing trading is more like buying or selling, holding position for, usually it's for the week, a couple days during the week, up to months, depending on what the position's doing. And as I mentioned, you do hold the positions overnight, and there's a gap risk. Now, investing is just like what Warren Buffett does. So you have a long-term plan. You don't care about the day-to-day stuff, even the month-to-month stuff, because you do sound analysis on the financials of the company, and you're going to hold it because you believe in the company and like what they do. And hopefully you're hedging your position just in case we have a downturn in the market like we had recently.
If you guys don't know it, we have 2 different Facebook pages, and one of them is Price Level Trading, and one is the private group Price Level Traders, and I'll put it in the chat in a second. But Brian has been posting some amazing trades for the swing trading, so something to follow. And if you know how to paper trade, and you want to follow his trades paper trading, and you want to learn to swing trade, that's a great place to start.
Yeah, absolutely. Yeah, I'm going to probably post more this week after do some analysis. So yeah, we're talking about day trading mainly in this webinar. Oh, nice animation. So I really like this discussion here, difference between trading stocks and futures. So I'll just tell you the main reason why I like trading futures is because I can trade them around my schedule. I don't have to trade, if I can't trade the cash open to the close, because I have a job, to do something for my job, I have other responsibilities that are getting in the way of me trading that day, I can trade the Globex session, which is pretty much the overnight session from when we open to before the New York Stock Exchange opens. So you can actually you can trade around your schedule. So you can fit it to whatever you're doing. And another thing is for futures that you're trading the same thing every day. You don't have to have a scanner and find new stocks to trade, which can be really stressful. And when you're trying to make a trading decision, first of all, which stock should I watch more? If I watch this one, I might miss this opportunity on this other stock. And then for me, it stressed me out. That's why I just stick to trading the Nasdaq or the S&P 500 futures. But 99% of the time, I'm trading the Nasdaq. And futures are also very liquid because a lot of professional traders are trading them. But I've seen in stocks, a lot of the stuff that will pop up on scanners there can be quite a bit of slippage if there's not a lot of market participants, meaning there's not a lot of volume for that stock, unless of course there's momentum. But there's definitely going to be no problem with slippage most of the time with futures, unless of course you're trading during a news event or some kind of crazy volatility that we've had the past few months or few weeks, I would say.
Unprecedented stuff we've seen.
Yeah, exactly. But typically you don't have a problem with slippage. So the other thing is like the tax treatment with futures. It's a fixed rate, 60-40 rule, which I believe 60% of your gains are taxed at the long-term capital gains rate, which I think is around 15%. And then 40% of your gains is taxed at the short-term capital gains. So when you do the math on that, it comes out to around 23%. But if you make over $500,000, I think that goes up just a little bit. But if you're making that trading, that's amazing. But more or less you're saving on taxes if you're trading futures. And this is even more important. If you guys don't have a $25,000 account and you're trading stocks, you're going to be a victim to the pattern day trader rule.
It'll lock you.
Which means if you break that rule, the first time they'll be okay with it. Second time, you're going to be locked out for 90 days. You can move your money, but that account, you'll have to pretty much reopen another account with your broker and move the money into that one. With trading futures, you can take as many trades as you want, and you'll never have that problem. And the commission is extremely low compared to trading stocks. I think round trip
Extremely.
is like on the micros is like 70 or 80 cents. That's a buy and sell per contract, and then for the minis, it's around $4, and that's using AMP though. Okay, so
we have entire videos on our Facebook page and YouTube about breaking those down, by the way, AMP and things like that. I mean, we're going to talk about it, but just know that there are singular videos on that, and we'd be happy to do more singular videos with details around some of this stuff if you request anything.
Absolutely. So this is what one of my mentors always told me. He always said, and Kristen can definitely relate and remember this.
Mm-hmm.
James always said, trading is simple but not easy. What does that mean? Like, you know what you need to do, but how come I'm not doing it? Why do I keep doing things that I know what to do to make money, but I'm not doing it? And that's because I would argue that trading is probably more than 80% mental, and I think Kristen's going to touch on this a little bit. And finding a profitable strategy is not difficult. It's managing your emotions and your discipline to follow that plan, when to exit, if the trade is sending you a signal to exit against your position, and not allowing the losses to build up, being super disciplined like a robot. And that's the only way to really be consistent and last in this business. Because I see a lot of people have issues where they make a bunch of money in like 10 days and then one day will wipe them out. And I went through that. And that's because of all this stuff that we're going to be talking here today. And it's really just not following my plan, being overconfident, and the market humbles you.
It also lets you know if you have the mentality and the stamina and the wherewithal to be a day trader versus a swing trader versus an investor. Sometimes people will try different things and they go, "Ooh, that's not for me." And some people know right away. They're like, "Oh no, there's no way I'm day trading.
Mm-hmm.
I'll just be an investor. I don't want to look at it." I hear that all the time. No, and now they're calling me and they're like looking at their accounts now.
Totally. Really quick, these are some of the characteristics, but not all of them. We just have to be okay with accepting risk reward. We have to put our money on the line for potential profit that's more than what we're risking, obviously. And if we lose the money, it's a learning experience, right? What could I have done differently, or why didn't this trade work? Don't just shrug it off, because there's a lesson in every loss that you take. And also there's a lesson in every win that you have too. It's a constant learning experience. You have to be super self-aware and have self-control. And the only way to have that is to understand how you as an individual react emotionally to handling risk. You know, there is a difference between handling like a $500 account and a $50,000 account. Will act differently. Usually it's a lot easier to trade less money, and almost, I would say 100% of the time it is. Just because you have more money doesn't mean you know how to trade better.
Exactly. Way more
Consistency,
stress.
yeah, it is. And more potential risk and loss of your hard-earned money that you work for. And consistency, patience with a PAY, because you got to wait for your trade setups to form. And then when you're in the position, if it's still working, this is something I continually have to work on. Kristen's really good at having patience when she's in a trade to capture the bigger moves. And that's how you can really capitalize on a trade. And then the
Which
discipline, obviously, to follow the same plan.
I'm going to blame it on
You,
being older. Oh, not necessarily wiser, just older and having more patience with having children. But you have a puppy now, so you're learning to have more patience.
yeah, I have like a little, I guess a daughter, I would say, but she's a little puppy. And then this is number 5 is huge. Like, you have to be stress free when you're trading.
Mm,
Otherwise, I mean, there hasn't been one day that I have made money when I was stressed out. Usually it's either a max loss day or nothing's working and it's like I made $0 or I just paid for commission. So you got to be aware of that, and then know that and healthy. Yeah, that's right, Tony. You just gotta, you know,
totally.
if you're all of those things, and if you're having second guesses about it, then don't trade. Be calm and decisive, wait for your setups, and I always like to say, hit the button. Don't be afraid to do it.
Can I let me talk about number 5 real quick, because one of the things I found with trading with others is like helping them call themselves out. So for example, Brian and I have a pact. Like, if you know I'm going through stress, I mean, we know our private lives. I mean, we've become really good friends, right? So there's been times where I get in the room and I'm like, I am so stressed out. And then the other person, we hope, is going to say, maybe you should just paper trade. Don't trade real money today, or just wait and be patient. I mean, having other people to trade with and friends that understand is just great to say, listen, you sound horrible today. Just calling each other out, I think, is really helpful. So that it really
Hmm.
does make a big difference. I remember placing a trade in the middle of prepping for a hurricane. Yeah, don't do
Bad
that.
idea.
Yeah, I was in an Apple trade.
Don't trade with
Totally.
from your phone either.
Yeah, that was what I was doing. So it's just reiterates that, becomes a in your trading plan and one of your rules you're not allowed to break.
And I would say don't trade from your phone unless you already did the analysis and have alert sets and stuff set to enter a trade. But if you're doing analysis on the fly and you have your phone handy and then you enter a trade, don't do that. It's never fun. So I'm gonna try to hurry up and get through this stuff because we're like 30 minutes into this, because I want to get to the fun stuff, looking at charts. So futures, I'm sure most of us know what futures are, but just in case someone doesn't, futures are like an option contract. It's just a derivative. It's just tracking the bigger indices like the S&P 500 and the Nasdaq, the Russell 2000, the Dow Jones. There's pretty much a futures contract for almost everything. And we just buy and sell that futures contract, and a, it's just tracking the bigger indices, like I said, and mainly it's fluctuating based on what other buyers and sellers are doing, what's the supply and demand like, what's kind of economic data or news came out that day, did Trump make a tweet, so on and so forth. And these are just the categories, but we don't trade any of that stuff besides the equity index, just the Nasdaq mainly. Okay, so just like options, futures contracts have expiration dates. And there are 4 contracts, 4 months that we trade. So it's the March contract, which is the H code, September, June, and December. September is U, June is M, December is Z. So currently we're on the M, right? Yeah, we rolled
Yes.
from the March to June a couple of weeks ago. And usually the week before expiry, which is in these months, on the 3rd Friday of that month. But we usually roll to the next contract the week before, or when we see volume start to pick up on the next contract. So just to give you an example why you don't want to hold through expiry, more or less you're going to have to take delivery of that asset, or it could be physical or it could be the actual indice. In this case, I am just talking about crude oil. Like if you're long, that means you're going to have to pretty much buy a barrel of oil, whatever the price of the contract is, times the point value, which if it's $63 a barrel, which hasn't been there in a long time, and you could actually buy a barrel of crude oil for around 20,000 right now. So it's essentially the point value times the current price at expiry. So I've never experienced having to pay for this or getting assigned a futures contract, and I don't want to find out, but I'm pretty sure there's no easy way out of that besides that you have to pay the money to do that. So don't hold. Make sure that you're buying and selling in the day. Close out all your positions. There's a cancel all or flatten button in your broker, and we have a video on how to do that with Sierra Chart, that platform to put your orders in through AMP. If you need that video, just let us know. We can also cover that in here if it's helpful if we have time.
He said he went right past it and said it really fast. So I'm just going to reiterate that. Make sure before you close your platform, or maybe after every trade, you hit cancel all, because sometimes you may have a target or something and you closed it out, and that target order may still be sitting there for a sell order, and it's off your screen for some reason. Listen, we've both done it. So that's why I'm just going over it again.
Yeah.
Because it gets filled and you're like, how did I just get filled? And you're looking and you're like, oh geez.
Yep,
Cancel
exactly.
all.
Yeah, cancel all will not get you out of position. Flatten will get you out of your position, and cancel all open orders. There's a difference. Learned that one the hard way. So yeah, the contract format, and if you're using TOS for your analysis, Thinkorswim, you would just do / then these examples down here, which is ES H20, that would be for the March, and so on and so forth. And the last 2 digits are usually the last 2 digits of the current year we're in. All right, next slide. Oh, so this is the leverage slide. As I mentioned, cover this really quick. The whole point of this slide is like futures, you can make a lot of money because you could trade. I only trade with $2,500 because you don't need that much. Because if you look at this example, you're controlling. This is an older example. So if the S&P futures are at 3,000, and the value of that contract is 150,000 for the ES contract, and AMP's day trading margin, or that I'm using this as TD Ameritrade just to show you like a different example, is 6,600 to trade one contract. I'm sure it's a lot more now, but around 4%, you can control $150,000 by just fronting $6,600. So just be aware of that. Be aware that that you need to use hard stops when you're trading futures, because you never know when a tweet's going to come out. You never know when some kind of news is going to break that's going to move the market in a huge way. You just don't want to be stuck in that situation where you're well past your loss for the trade. You should have stopped yourself out. That's the only way we can survive in this game, is that we need to use a stop loss. You know, sometimes I'll personally use like a mental stop loss to exit the trade, but I always have things on my platform set up in a way so if something were to happen, if some reason I broke my plan, it's going to take me out at my max loss for the day anyways, so I can prevent myself from a catastrophic loss, which is the whole idea when you're trading. You want to protect your capital.
Is that through
So
your broker or is that through your platform, trading platform?
you can do it through Sierra Chart,
That's what I thought. Okay.
but you can control that. They don't have it password protected. If if you're really serious about trading, and this is the best thing that I've learned, is to call your broker up and have them set the hard losses and the number of contracts that you're allowed to trade. They'll take you out. It'll cost like an extra 10, 15, $20. I don't know what it is, but it's going to be worth it if some reason you got taken out for your $500 daily loss, and instead of it, you getting a margin call and you just blowing up your account. So
Did you do a video on that?
not
I know you
yet. I
talked
need
about it.
to.
Okay. I'll make a note.
So what do I mean by geopolitical landscape? So pretty much there's a lot of things that move the market intraday, weekly, long term, like economic events. We are always looking at, Chris and I will always review in the trading room before we start trading to make sure we are aware of any economic events that are coming out. Typically, there's like ISM manufacturing, GDP, retail sales, unemployment, and unemployment numbers are a big one that came out the past 2 weeks. That definitely moves the market. Usually it comes out an hour before the cash open. You can trade it, but if you're a beginner trader, I don't recommend it because the market can move quite significantly, and if you don't understand to get in, because the market can whip around quite a bit, then it's just best to wait till it calms down and then trade the reaction after the initial reaction.
Well, yeah, and
And
we're also discussing it in the morning market update at 9:15, and that's recorded. I'm putting that in the chat just so people that don't know, if they want to know what happened overnight and what's happening that day, and they, I used to not be able to watch some of the ones until 10 a.m., but I would watch them before I traded. So I'll put it in the chat.
yeah, absolutely. And we have current events as well. How do those events affect the market? We have the coronavirus pandemic going on, which is a very bearish event because the economy is being shut down, and I don't think the market has really priced in the current effects of how the economy is going to be dramatically affected with a lot of people being out of work. And I think eventually we'll see in the coming weeks as we got to pay attention to how bigger companies are reporting earnings. How does the economic events or the economic data look? How is it trending up or down? Stuff like that. And the market will eventually move in that direction. And last Friday, we actually saw, I think like 2 weeks ago, we saw a rally based on just the stimulus package. So a lot of times you'll see like a buy the rumor, sell the news type things, and the price will reflect kind of an expectation of what people are thinking in the market as well. But usually I wouldn't take trades based on this stuff. I would trade solely on price action, just follow where the volume and the market structure is going. We'll talk about that. You don't need to sit here and wonder why the market is moving based on this type of event, because it's probably confusing a lot of people. Like, why aren't we selling off? Why did we go up? Why are we holding support? I don't need to beat ourselves up over that. We just need to follow where price is going, and that's all we do as day traders. And we use a free news squawk called Financial Juice if you guys are interested in ever having that while you're trading. Guy's really awesome.
I love it.
So here is the global market opens and closes. So we have New York Stock Exchange. I think everyone knows when that opens. It's on Eastern Standard Time. We're trading Globex that will consist of the China, Japan, and London markets. That's when they open and close, and there's a lot of trading opportunities presented around that if you're trading overnight. In the futures market, so futures trade from 6 p.m. Eastern Standard Time on Sunday to 5 p.m. Eastern Standard Time on Friday. There are 2 trading halts to be aware of, and make sure that you close your position before these. And if you're a trading top step trader, you also got to remember that you got to do it 10 minutes or 5 minutes, I believe, before the first trading halt. Otherwise, you're going to break a rule. And trading halt will be at 4:15. So the futures will actually trade 15 more minutes after the cash market closes. And then it will close for 15 minutes and open for another 30, then close for another hour, then we'll reopen the next session.
Hey, do you want to talk about the trading halts real quick, since you're mentioning that type of trading halt, the trading halts that we've been seeing happening like crazy? Define those just real fast.
Oh yeah, you're talking about the limit downs and the limit
Yeah,
ups.
yeah. We've seen more in like 10 days than we've seen in a
Yeah,
decade,
so
I think.
you got to be really careful trading overnight sessions nowadays, because I believe the rule is if we hit plus or minus 5% on the indices, the futures contracts, we'll go into a trading halt, which can be, usually they'll lock it down until the cash open. And then there's continued trading halts into the cash open, which I believe is plus or minus 7%. We'll close for 15 minutes. And then there is, I'm not sure the next one, maybe it's 12%. I don't exactly remember.
Yeah, it says
Maybe,
typically at least 5 minutes, but can be longer. Sometimes yeah, I mean, they usually announce it, which is a huge delay. You just got to go looking for the announcement. Halt for 15 minutes, halt until the next morning.
yeah, exactly. And I think 20% down on the day the market will close for the rest of the day.
You never know these days.
Yeah, exactly. So these are the instruments that we typically look at. So just to quickly summarize, we trade the Nasdaq because it has better risk reward than all the other futures contracts that we've seen. But lately, since the volatility is up, ES also is presenting a lot of opportunities. But before the volatility, ES can be quite choppy. And while the Nasdaq's moving several tens of points, the ES is moving like 2-3 points. So we don't really trade crude oil, but it's very similar to Nasdaq, and it's affected by the weekly inventory report, which is usually Wednesday at 10:30 a.m. Eastern Standard Time. And for these instruments, ES is the S&P 500 futures. The tick sizes are there, 0.25, and the tick value for every tick on ES is $12.50. Nasdaq is $5. CL is $10.
So 4 ticks make a point.
4 ticks for the ES and NQ, yes.
Okay.
Yep. So that example there is showing you moving from 7,500 to 7,501. That's 4 ticks, that's 1 point. We also call it a handle, and that's $20 per contract. And micros, I'm sure Kristen will talk about it more, and I will too. Micros are 1/10 of the risk compared to minis. So it allows for wider stops in this volatile market that we're currently trading.
And they only came out last May. So those are, in theory, new to the stock market, and probably huge for new traders, because it totally changes the risk and the capital and the leverage that I know that we're going to keep hitting on here. But micros are huge. Underline that if you're taking notes, because you need to look into that more if you're not sure what a micro is for futures.
Mm-hmm. Yeah, it's really like a godsend for us traders. You don't need much money to trade them, and you can focus on actually becoming a better trader without risking a lot of money. So I think this next part of the slides here is going to talk about risk management. I like to call it capital defense management. A little play on words, because sometimes people associate risk negatively, which can be good, or it's probably not a good thing for us as traders. But as I saw Tony mention in the comments, we want to focus on our risk reward ratio, which is super true. So this table will essentially show you, based on your win-loss percentage and your average risk reward, where you fall as being profitable, not profitable, or break even. And also, depending on the type of trading style that you have, whether you're a position trader or someone that likes to build a position or enter a trade on longer time frames and expect a higher reward for the risk you're taking, you're probably going to have a lower win rate, because your wins are going to be bigger. And if you're a scalper, there's nothing wrong with it. It just depends completely on your trading style. You don't want to try to ever replicate the way someone else trades, because you got to find what works for you and what you're comfortable with. And as a scalper, you're going to have a higher win rate, but your risk reward is going to be more or less the same, maybe slightly. I've seen some people slightly skew it to the risk side as opposed to the reward, because their win rate is above 80%. So it just depends on your trading style. And
which
we
is
really,
like just to reiterate, a trading style, you probably will learn, some stuff from us, and you may learn other things and strategies from other people, because there's a bazillion strategies online. But it really is about fitting your personality. And I always say that each trader is so different. It's like a fingerprint. So definitely in how you decide to trade.
yeah, exactly. And you have to be adaptive, like Kristen already said, adjust based on what the market's doing. And this is kind of going to lead into the trading psychology eventually. But Mark Douglas, if you guys have never read or listened to The Trading in the Zone, that's one of the best trading psychology books out there. Highly recommend it. It's something that I still refer to and reference on a weekly, sometimes monthly basis. And he says losses are simply the cost of doing business, and it's just true, because if you have another business, you have expenses, right? In order to turn a profit, you need to have a little bit of losses to, according to your plan, that'll eventually, in the long term, make you money. And this is another guy, Ed Sykota, very successful trader. This kind of touches on what I was talking about, making sure you have hard stop loss limits in place. If you can't take a small loss, sooner or later, you'll take the mother of all losses. And if you've been in the business long enough, you have experienced this. And if you haven't, and you've been trading for years and haven't had a big loss, man, you are a unicorn, I must say. But, or you just have an amazing discipline, like you stick to your plan. But this is some of the best advice from some of the best, most successful traders out there in the industry.
Yeah, Chat with Traders is a really good place to listen to interviews of all different types of traders. And they will all talk about what they've been through and how much learning they've put into it. And so I'd like to just mention that Chat with Traders podcast,
Yeah,
YouTube channel.
yeah, absolutely. I love that's actually one of my favorite YouTube channels and podcasts. The interview with John Rambo Moulton is one of my favorites. You guys should check that out. So I was trying to relate in our daily lives, like how we actually have real examples of losses that we don't really pay attention to. We kind of just accept and we're okay with. And a big one is probably car expenses, mainly like the car payments, the loans. Definitely, we're buying clothes to go to work. We have an expensive cell phone, expensive TV, or whatever we spend our money on, and it's not providing us any return on the money that we're spending. And well, with trading, if we invest or spend money on maybe losing a couple of trades to learn how to actually make money trading, I think the long term, that's a better investment. And hopefully that's psychologically you'll be able to, I guess, it would be more of a positive effect on your psychology to just, because if you can be okay with losing money trading and you have no fear of that whatsoever, because you're focusing on actually taking good trades, then you're going to do really well in the long term. Because you can make as much money as you want trading, but you can lose as much as you want. But there's a fine line between not having fear of losing money and not having fear of losing money and like just being straight up like reckless, I would say. So you have to be able to check yourself. But some of the best traders like John Rambo, he talks about it in his interview with Chat with Traders. So quickly, how do we calculate risk? So Kristen's going to talk about how to create a trading plan, but the biggest information, the most important information you need in your trading plan is going to be associated around risk. For example, like how much money am I going to lose, allowing myself to lose per day, per week, like the drawdowns, or I have to take a break. Like, what does that look like? You can do the maximum loss based on a dollar amount or risk per trade, depending on what you're comfortable with. Also, max position sizing. You don't want to over leverage the accounts. Maximum trades per day. If you're more of a scalper, you're going to probably have more than 10 trades. But there are typically 2 to 3 high quality trades per day, and you could probably set a rule for yourself on that. And when to scale up, more or less. And this is just an example with a $10,000 account. I usually do my risk based on percentage. And if I wanted to risk 2% of my account per day, like max loss, giving myself 3 chances. If I get stopped out on 3 trades in a row, I hit my max loss for the day, and I'll stop trading. That'll also calculate my maximum loss per week. More importantly, we did create a spreadsheet that will calculate the money per trade based on the first few inputs, and if we're trading micros or minis, how many contracts we're allowed to actually enter. And I don't know if anyone has seen this here, but this is just a spreadsheet that I use sometimes to give me an idea of how many contracts I can use based on my stop. And the only thing I really look at is here, based on the stop that I'm coming up with and that I'm using the micros on NQ, how many contracts am I allowed based on that stop loss? So I know, like, within seconds what's my position sizing based on my stop, just in case the market's moving fast. You got to be able to calculate that in your head too. If you eventually you'll be able to do that, but if you have a spreadsheet, it's super helpful.
Anybody that wants a copy of that, just shoot us an email or text us or whatever.
Yeah, I'd be more than happy to share it. It works for NQ and ES. So this is a slide. I don't know if anyone knows. I'm sure everyone knows of Top Step Trader. If you've been trading futures, at least heard of them. So we are an affiliate partner with them. If you guys are interested in getting a 20% discount, if you don't want to trade your own money for whatever reason, whether it be you're not comfortable trading your own capital or you don't have capital to trade, you could definitely sign up with them. They have a micro swing trading combine, and they also have the standard e-mini trading combines as well. And it's also an amazing platform just to practice your trading strategies if you're new, just to get your feet wet, while also working towards actually getting funded to trade other people's money. So I'm sure, Kristen, if you want to touch more on this as well.
I just think it's a fabulous place to learn because I think in my mind, I would always recommend paper trading first and then move into something like Top Step Trader, because at this point now you are putting some skin in the game. You're not putting much. I mean, $50, $100. I mean, just to start, because now you've invested into yourself, but you have the opportunity to not only become a better trader around their rules that they know work, and it's all on their website, by the way. So I'll put these links in the chat. Mm-hmm. But if you do really well, and when you do well, you get paid to do that. So there's so many positives to it. There's more positives than negative as far as I'm concerned.
Yeah, I totally agree.
Okay, so don't let me forget to do that. I know we've just jumped into where I'm taking over, because in the futures course that we have on our for our members, I did the trading psychology. Before trading, I've always just really been big into mindset. And when I learned, actually, it wasn't taught to me first maybe it was, but like Napoleon Hill and a lot of these books that we're told to read to be successful in business and in life, that has to do with psychology and your belief system and things like that. But then I got into trading, and then the big successful 20 plus years traders of all different backgrounds talk about the trading psychology, and what that is the mindset that's kind of playing in the subconscious, and that has to deal with maybe how you were brought up in those first impactful years of your life. And then usually that's the people that you're surrounded with, you don't really get a choice with. So if they have money around fear and greed and self-sabotage, you may have these mindsets and you may not know it. So again, I'm just going to hit on a couple of things, but I did a whole course on it, and I don't even know, I may have went a little long on that course, but it was really, this is important because Brian already hit on it. It's like an 80-20 rule. Your mindset is huge. And, the 20% is the strategies, which you can just learn all day. But if you start losing money and blowing accounts up, you're like, oh my gosh, I'm self-sabotaging, or maybe there's a fear or things like that. So go ahead and go. I don't think I can go to the next slide. Why don't you do it for me?
Absolutely.
I think you have all the control. So this jumps into that. And if it really was just about skill, then everybody would be trading. And it is not. And that's, I think, why people pick certain strategies, because it is around their psychology, which is around their personality and what works for them. So go to the next one for me.
This is one of my favorites.
Yeah, this one took me forever to make because I'm not really good with PowerPoint, but I'm proud of the way it looks. So we had in January a lot of elation, a lot, and I've probably have been through all of this when I was learning, but right now, I think we can all guess, we definitely are meeting people and getting phone calls and emails where people they're not in denial anymore, and they may not, or they may be in fear, but I would say right now, the public, as far as people that have any money in the market, are in fear, panic, and I want to give up. I have talked to people in all three of those parameters right now, and nobody's in denial anymore. I saw it. The denial was short-lived because of how fast everything moved, but this is real, and this is really common. So this is a really important trade to hang in there tight, because I'm telling you what, I'm so excited for the volatility and all of this to settle, because when we come out the other side of this, you guys, oh man, it's going to be so much easier to trade, because it's been a whipsaw lately. And if you've been watching it at all, people are just out. Like typical traders and newbies are not even trading, because they are like, I don't even know what to do with this. So I really love this trade. I know Brian does too, but just keep in mind that when you come up the other side with confidence, if you look back over here on the left, being confident can lead to all of these other problems again. So a lot of the really good traders and the mentors and the people, I know that Brian and I have both watched their videos over and over, is that they really attempt to stay humble. Like when they're doing good, they are nervous that they're going to protect what they know. And they're just always on, what's the market going to bring me tomorrow? They don't have that confidence. Like, I know what the hell I'm doing. I'm awesome. It's like the market will be irrational always. And I can count on that. So is there anything else, Brian, you want to say about this?
Yeah, the fact that this curve right here can be based on like intraday trading and also investing. So
Oh,
it can
yeah.
happen.
So it's not
It can
just long
happen
term.
it can happen super fast if you're day trading. And it can also happen like obviously long term. Most people experience this on the bigger sells like we just had. But if you're a
Panic
day
sell.
trader, yeah, like this can happen day trading too. So there's no scale I would say represented here, but this can happen several times in a day too to a trader if you're not really self-aware of what's going on.
Okay. What is next?
What is next?
Okay, so this is huge. So we talked about Mark Douglas in that book, and I'll show you in a minute. I have a slide. I think it's the next one. It'll show a picture of the book. But again, if you haven't wrote down his name, he has a ton of stuff out there. But his big thing is make sure that if you're going to trade, you need a probability mindset. And ironically, at price level trading, we trade off certain price levels that we're going to discuss in a minute, and that's what creates the higher probability. And so if you know that when you're going into trading that you're only going to take high probability trades, and you're already in that probability mindset. And in a minute, I'm going to talk about trading plans. And so your trading plan are basically your rules that you will follow, and you will find that you will put your mindset in statements and the rules that you're willing to follow. Like, I won't enter a trade unless it's off of a pivot or things like that. So he basically states here, I don't really need to read this to you, but he talks to, he's talking to us about what the fundamentals are, he feels. And I don't even know, I should know when this book was written, but it still holds true today that anything can happen. And we just need to remember that, because we've had some horrific reports come out this week and the market went up for a couple hours in the morning. So we're like, an 8:30 report was horrific, and then all of a sudden we're moving higher. And so that's what we constantly have to remember and remind ourselves. You don't need to know what's going to happen next in order to make money. And that's what Brian was just mentioning about price action. Mm-hmm. Random distribution between wins and losses for any given set of variables that define an edge. So again, the edge right here is nothing more than the indication of a higher probability of one thing happening over another. So we don't know what's going to happen, but what are the probabilities of that we see? And you're going to see it in the chart in a second, that okay, the market, the candles have bounced at this level this many times, and I fib, and there's a moving average right here, and then that increases your probability of an entry, and then putting the exit, right, your stop, in case it doesn't go in the way that you thought it would, again, because anything can happen, but you know where your stop can be. So you can get stopped out, but if it's bounced there 4 times, is it going to bounce there again, or 2 times? Mm-hmm. So something to think about, and that's what that probability mindset is. So I think the next slide is the books, right? Yeah. Okay. So the Trading Zone book is that Mark Douglas one. And then the other one here by Alexander Elder is, if you see another color, the red book is the newer book. And I would just start with that one, because that one has to do with the changes of not just being more people that have computers and are trading online now, more common people. The other book was written before more people were trading online. Let me just say that. But excellent books. Yeah. And rereads. You don't just read these once. And I have them on Audible. And so like at the gym or a walk or a really long drive, this is the stuff that I will play. Okay, I think, is that it for this slide?
Yeah, I think we're about to get into the fun stuff.
Oh yeah, look at that.
Yeah. So now we're going to talk about technical analysis. So if I had to summarize what technical analysis is, it's really just taking historical data and using certain tools that we have, identifying support and resistance. We have trend lines. We have all these tools that we can use to identify potential high probability setups, like Kristen was mentioning. And most of the time, it's just like a system that we've created individually that fits our personality and our plan, that can provide us where we should get in, where we should take our profit, and more importantly, where we should get out if the trade's not working. And a lot of the times for us, we identify usually where the market could bounce or reject, aka like a U-turn. You can call those inflection points. It's where the price is going to shift the trend, more or less. Like I mentioned earlier, and Kristen has too, you don't really need all these fancy indicators to trade successfully. You really just need to understand price action. And that's what we're going to talk about first here. And market structure is like another word for price action, but market structure is identifying, like, are we bullish, bearish, or are we sideways? And it is fractal. What I mean by that is the concept that you're going to learn here can be applied to any time frame. It can be applied to the weekly, the 5-minute, the 1-minute, 30-minute. It can be applied to the tick chart. All the same rules apply.
Which is super helpful.
Yeah, exactly. And it's identifying support and resistance simply. That's it's simple as that. So these are the types of structures that we can have. So when the market's bullish, or at least intraday, when we see a bullish move, we're looking for higher highs and higher lows. So every time we make a higher high, we should make a higher low, or at least retest the previous higher high for an entry. And the same thing for, we would buy the dip in that case. And bearish market structure, you just flip it over. We're making lower lows and lower highs. And we would sell the retracements to test previous support, now resistance. Neutral market structure is, you can actually have a strategy just mainly around neutral market structure if you want. It's more or less like the price is chopping in a range. You could buy the low and sell the high. And typically when a previous resistance is broken and it now becomes support is retested, you'll see a neutral market structure form because price is consolidating. It's rotating around that new support level to get ready for the next move higher. So every trend has three phases. You're going to have the continuation move, the corrective move, and the consolidation. So I have a bullish example here. Say we have a push up, we have a continuation move, and then we miss this trade. We're not going to chase it. And we know that eventually we're going to have a corrective move that's going to come down, and we're going to pull back and retrace, and then we're going to consolidate for the next leg high. And typically we don't really want to buy the first move up. When you see a previous high being retested, like in that blue rectangle here, there's a high probability of that trade working, especially if it aligns with like a fib, or if it aligns with like a moving average or something like that. So, oh, this is going to be fun. Let's look at some charts now.
Don't
So
forget, you can toss in comments or questions either in the chat or the Q&A if you see that button.
Okay. Let me move this dude over. So if you guys have any questions when we're doing this, just let us know. And if you want to chat directly with us on that question, just let us know. We'll unmute you. So I'm just looking at the ES. So which market structure you guys think we're in right now on the daily chart? Just looking at this. Based on what we just found, are we making higher lows, higher highs, or are we making lower lows, lower highs?
Can you point to the upper left and show them that the ticker and the 1 year and the 1 day up there what we're looking at? So we know what time. Okay.
Yeah, so we're actually on ES, S&P 500 futures on the daily chart. You can see my chart, right?
Yep, I can.
Okay, cool. So obviously we're in a bearish structure and it looks like it's going to continue that unless certain things happen. See if I can draw on my screen here. So here was the first, after we broke this, we were actually in an uptrend, right? We were making higher low. This was the previous higher high. Broke that here, made another higher low, kept making higher highs. As long as we held this, we'd still be bullish, and we did right here. And we kept making another higher high right here before we broke this level. That's when it became bearish. And then at that point, you'd be looking to sell the RIP. So here's the lower low, lower high, lower low, lower high right here. And it's continuing down, but right now we're at an interesting point where we're holding, we made a higher low, but we're still have a higher lower high right here. To be bullish, we really have to get above this area and hold, but there's a lot of resistance up here. If we do go higher, we have to clear this area. More importantly, this level here, there's a lot of resistance up there on these candles for a target back up to here. This line that I have as support here, which I believe if I zoom out, where's my zoom button? There it is. That was simply, I think, last year's low in May, the end of May. So, and also the other end of it, if we lose the support that we're building here, I really think if we lose this this big hammer candle here, we lose that low. It aligns with all the opens and closes of these candles over here. A lot of room to the downside. So we're really like in an indecision moment right now. It could go either direction. And I agree, Brad, it could continue downtrend or start to move up. Do you guys want to look at any specific charts and identify some market structure on any tickers that you guys follow? We can also look at more on the day trading time frame. Let me go to the NQ. I'm not gonna, I get in the habit of wanting to draw a trend line just to visualize the downtrend, but we can just build up on this and have an
Trend lines
uptrend
are
here.
huge. Yep.
And then once we lost this low, here's the lower high that formed here. That was signaling potentially a bearish down move. And once we broke that trend line and we back tested it, here's a confirmed, actually I'm gonna do that. Confirmed lower low right here because we broke this right there. And then the downtrend started, as you can see here. And we kept making lower highs and lower lows until we shifted here and made a higher low. That's when you'd start to become, you'd switch to being bullish as a trader, as an intraday trader. It did try to reverse here, but that was more or less a flag to continue the downtrend. But we'll cover chart patterns. Dino asked, how accurate are the stochastics to identify up or down trends? You know, Dino, I don't really use the stochastics. It's a lower indicator. It can work, but I wouldn't rely on it. I've seen divergence happen on indicators when it's clearly saying that we should be going short and the market's still going up like 10 handles at a time. That's why I typically look at candlestick patterns. Candlesticks, chart patterns, and also price action. Like, are we continuing to make higher lows, higher highs, or are we shifting? But you can use it as a guide. I think on the longer time frames, like if you go daily, weekly, and monthly, I think it has a higher probability of working. Like at least the lower indicators. Intraday, I wouldn't be using those indicators. So yeah, for market structure, all you want to do is pay attention to, are we making higher highs, higher lows? And you can identify this rather easily with candlesticks. And it helps to draw trend lines. We'll cover that shortly. I think I can go to the next slide. What are we going to cover next? Oh, candlesticks. Ha. So if you don't know what candlesticks are, essentially just representing based on the time frame we're in. Oh, actually, I got to go to switch back to my screen here. So depending on the time frame that we're on, the chart that I was just previously on was on the 5 minutes. So each bar, each candlestick will represent 5 minutes of price action. You'll have the body, which will just be open and close. Then you'll have an upper shadow and a lower shadow. And if we close higher than the open, you'll have a white or green candle. And if we close below the open, we'll have a black or red candle. And you can tell a lot about, oh, let me just write price action. Oh, we'll cover it, Dino, don't worry. We'll go into it more. So you can tell a lot about a candlestick, especially when you combine it with volume. Usually, well, actually, let me just cover our favorite 3 candlesticks. There's a lot of candlestick patterns, but these are the ones that I wanted to cover. There's actually one more that I wanted to cover that I didn't fit in here, which is like a tweezer top or bottom candle. So for an engulfing candle, you can see this quite a bit intraday even. It's when a candle forms after the preceding candle and the candle body engulfs the previous candle body. And depending on if it's green or red, that the next candle will show you that we're probably going to have a reversal, or the trend is strong in the direction of that candle that just closed engulfing the previous candle. And we're going to show you some examples of what we mean. Hammer candles are big reversal candles, and you can flip this over on its head as well and be in an inverted or shooting star as well. Usually you find hammer candles at really strong areas of support and resistance. They can also be seen on Fibonacci levels or trend lines. We'll talk about that briefly in a second. And doji candles are representing indecision. Since the open and the close are more or less the same price, you can have a long or a short upper wick or lower wick. The longer the upper and lower wicks are, the more price action occurred in that candle. And you can also have, it's almost like a doji or a hammer or an inverted hammer. When you see a candle that's formed pretty much closes near the open and the close are near the high with a long lower wick, or flip it over on its head, or near the open and close are near the low with a long upper wick, that's a really strong indication of the sentiment of the market participants. So let's take a look at some candlestick patterns, how to identify them on our chart. Just to let you guys know, you might not understand everything we're showing you right away, but just keep practicing and getting screen time and reviewing charts. You'll be able to recognize these patterns like super fast and eventually be able to make really quick trading decisions based on what you're seeing. So Kristen, can we see my chart now?
Yep, I see an NQ. I believe it's a 5-day, 5-minute.
Yeah, it is.
If you guys can't see it, let us know.
So without actually looking for it myself, I can use Thinkorswim to identify all this stuff, which is pretty cool. So the first one was an engulfing candle, right? If you look around, you'll see a lot of these. For example, this is Friday's price action actually. Let me zoom in. This was yesterday's price action. Here's the cash open right here. See how we went up and looked above the high right there. This blue arrow is actually the engulfing candle. We looked above with a big upper wick here on this candle, and I think there's quite a bit of volume. Yeah, there was a lot of volume on that candle. And the next candle formed an engulfing candle. This candle body swallowed this one right at a resistance. So there's a high probability that we're gonna probably reject here and have a pullback. And you can kind of see here, we kind of formed a flag and eventually broke it to the downside. So how would you enter a trade here? You would simply have a stop or entry near the open and closes of these candles. Let me clean that up because it's looking a little messy. You'd pretty much have an entry here short with a stop above that wick, with a target back down to here. First target would be here, and then down here, and then trail it if you have a runner. And you saw it kind of just broke and kept going down.
You could even do another first target a little higher up.
Yeah, it could
like
even
if you had multiple contracts and you wanted
here.
to get paid with some of it and take some off and leave a runner, because you just don't know.
Yeah, I always emphasize if you have multiple contracts, it's a lot easier to stay in a trade as opposed to if you only have one. That's why the micros are amazing. So trading 2 micros is not it's not much risk in doing that compared to trading 2 minis. So you could practice trading with multiple contracts using the micros, taking one off at your first target, get paid a little bit, then move the stop to break even on the runner and see how much you can get out of it, or at least take profit at the next target that you have. So that's one. You'll see these engulfing candles like pretty much everywhere. I mean, here's another one. It's rejecting. In order for it to break the downtrend here, it would have to clear more or less this area, and it didn't. So they're still making lower highs, lower lows, and we're continuing down because that's more or less another bear flag. So keep an eye out. That's a bearish example. There's probably some bullish examples somewhere in here.
There is one down. Yeah, the arrows are red or pink.
Oh, they're pink, yeah. Like right here. This was the move up into, this is from like the London price action up until the jobs report that we had. Yeah, this is a bullish engulfing candle.
Did you see how we ended the day on Friday? Volume was more than
Right
open.
here. We're in an uptrend, yeah, and we a lot of volume came in here, so definitely would be bullish as long as we hold the low of that candle. So clearly can put an entry there and just trail it all the way up. Brad asked, good stuff. Do you guys have a specific system that you teach us exact trade setups? Well, I would say since it's based on price action, we're waiting for price action to confirm a trade setup before we take it. We do have the way we trade moving averages is very specific, but we haven't got to that yet. When you're trading price action, it's more discretionary, I would say, because you're waiting for price to confirm the trade direction that the trade idea that you have in mind, because you don't really have anything on your chart besides candles and volume.
To me, I think of a system like what John Carter has thrown together. I mean, we have a way that we trade. We're kind of showing you the parts that make up our trading system, but we haven't named a system.
Yeah, this is just components that eventually we're going to bring it all together and show you how we use it.
I think using the term price level trading accidentally when we started using that was like exactly what the system is. We are literally trading off levels that are algorithms and Fibonacci's and pivots. And I mean, we're going to keep hitting on that. But then when the candles create different patterns and give us the sentiment, then we know where is the best place to enter and to put that stop to create that high probability. I hope that makes sense, Brad. I'm really trying to answer that. Awesome.
Yeah, and here's a hammer candle. I mean, it has to align, like for these trades to work, you kind of have to, I would probably look at like a longer time frame, say like the 30-minute. Let me zoom in here. That is a hammer. And see how it aligns with the previous support here. Although the structure is still very bearish, but you could have easily entered a trade here after seeing that bull or that hammer form. Where did it go? There it is. That particular one I wouldn't have entered on. This one makes more sense, and you could take a trade up to here, having a tight stop below the close of that candle, or the open of it, more or less. But the better trade, obviously, once that support broke, was to short the breakdown, because once support breaks, it becomes resistance, and vice versa. And here's an inverted hammer, right at our resistance. You're never gonna get the best entry, I would say, unless you're just floating your orders out there at these levels and you're confident in doing that. Usually we like to wait for the confirmation, wait to see like price action is confirming our trade idea. We don't get the best entry, but we get a high probability entry because we're just jumping on the momentum, which is a better way to trade instead of just putting blind entries, like putting a blind entry there and it just price just goes straight up through your stop loss. You want to wait to see like a candlestick pattern. At least this is all we're covering right at the moment is candlestick patterns combined with market structure, combined with support and resistance. You see a candle like this come in on the 30-minute chart, you know that on the 5-minute chart, you're going to find a short setup. You'll be able to have your stop a little bit tighter because obviously we're not going to trade if it's too much for our risk on a 30-minute chart, we're going to have to dial it down into the 5-minute. So dojis is the other one. I gotta get rid of this annotate tool. Dojis are one of my favorite candles to trade because they're really big signs of potential reversals. And not all candlestick patterns, when they form around support and resistance, are created equal. Some look better than others. Obviously, this is probably not a good bullish trade to take because look at the downtrend that we're in. If we just draw, we're making lower highs, lower lows. So it's clearly not the best bullish setup. So you have to take that into account when you got to first look at market structure. Are we making higher highs, higher lows, lower highs, lower lows? And you want to find a trade in the direction of that to increase your probability of the trade working and you making money. So let's look real quick for dojis. Also known as morning stars and evening star reversals.
That is so awesome that they do that in Thinkorswim. It is a really great platform, by the way. That's TD Ameritrade that does that, and that's free. You don't even have to put money into it, and we both use it.
Yeah. Oh, that's the halt. That's not going to work. I'm going to try to go on like the 5-minute chart.
Well, there's a lot.
Here's a doji right here. See, we're in a downtrend, making lower highs, lower lows. We formed a doji. I don't know if you guys can see it. Let me circle it. Formed a doji here, but look where the high of that candle is. It intersected where it was previous. There was previous support. Right here is like a box, right? You're gonna be bearish as long as you're below this level. So there's a fight here with the bulls trying to break it above there, and we're clearly in a downtrend. You don't want to go long here because you'd be fighting the trend, you'd be catching a falling knife. So more or less, if you wanted to go short and ride this continuation down, you could enter around the middle part of that candle with a stop above there, a really tight stop. I think it's like 5 to 10 points. With the potential profit of just on down days, if you can get an entry like that, the risk reward ratio on bearish days can be substantial to your side. Especially when we're in current market situation that we're in now. If we break support, there's no one to buy it, and it's kind of like we're just falling up a cliff like we are here. But you kind of have to wait for a signal like that on a candlestick. There's a doji, and it's signaling that there's some indecision, but the trend is more than likely to continue as it usually does. Kristen's probably the better bearish trader out of the two of us. I usually trade long, but working on my bearish signal, my bearish muscles, I would say.
Well, in day trading, you always can get a bounce. So you could see here, Brian would have loved to have caught that, what does that say, 22 hours, 23 hours? Over here on the left where it just came all the way down, and he would wait, and it's probably a resistance there, so he probably has a fib or something there, and he would go in with confidence that, oh, it's bounced once, I'm going to take that trade, and he would go in there with a really tight stop, and he could take that one green candle. I don't even know how many points it is. That looks like a lot of points.
40 points, risking 5 maybe. And this is another reversal candle here. See the doji? Right at resistance. Draw a line here. Actually, it's probably better I just use their tools because I won't be able to draw it straight. I'd probably draw it right there. That's resistance. The better one might be right here. See how we're not clearing the highs of these candles, and that's where we rejected. So again, made a lower high from, in order to turn super bullish in this market structure, we'd had to clear that high, and we made a lower high there. So trend's more likely to continue again, which it did. And I do see a rising wedge there, which we'll cover, which usually breaks down in the opposite direction that it's going. Well, rising breaks down, will break down. Falling wedge usually break up. So what do we have next here? Let me go back to the slide. I might have to pass this over to you. I got to use the restroom. I don't want to pee my pants on a live webinar.
That's disgusting, dude.
Let's go back to here.
Maybe everybody needs like a really quick break, or maybe we'll just finish it. How many slides you got left?
Well, we got chart patterns, then we got the strategies that we use, like the moving averages and stuff. Actually, give me a break. I'll be right back in like
2-minute break. Everyone
right
gets a
back in a
2-minute break. 60-second break.
Yeah, 5
Okay.
minutes. 5 minutes sounds good. We'll be back, guys.
Okay, bye.
Oh no, Ray, we're on a break. I'm back. Feeling a lot better to hammer the rest of the stuff out.
Okay. Sorry, Ray. Yeah, we just needed a break.
We're like an hour and a half in and trying to, there's so much information to cover in trading. We're trying to simplify it as best as we can. So what screen am I on? Are you ready to continue, everyone? Let's do it. I'm on screen one.
Okay. Still recording, still looking good. Okay.
Okay, so next up, chart patterns. So so far we've covered market structure. That's just pure price action, recognizing if we're in an uptrend, downtrend, or sideways. And then we covered candlestick patterns. There's a lot to cover on those, more than what we did, but general idea of how to recognize those patterns. And now we're going to talk about chart patterns, which is more or less identified by using trend lines, I would say. So usually when you're drawing trend lines, we have a study that automatically will do it for us, but sometimes it doesn't always capture all of the the highs and the lows that we want to connect. But usually when you see at least like two consecutive points, like two higher lows or two lower highs or something like that, you can draw a trend line, and that can act as support and resistance. And typically there will be another pattern forming maybe with another trend line in combination with the first one that you see. So it's a really good handy tool. I have a really good habit that I built before I do any trades, I'll immediately identify the trend lines that were in the current price action that we have. So I can kind of say, okay, if we hold this level, we're going to be bullish. If we hold that trend line, but if we break it, we might go sideways or we might shift down to the downside, stuff like that. So it's really handy to, just like drawing basic support and resistance, horizontal support and resistance, drawing trend lines is going to keep you out of the middle of the freeway, I like to say, and keep you near high probability trade entries. And you'll also be able to keep your stops rather tight because you'll know whether or not the trade is going to work pretty quickly. Gotta click next here. So this is just an example. You can see first we're in an overall downtrend on that chart, and then price formed a new uptrend, as you can see with that higher low all the way to the right, and we're breaking it or testing those downtrends, and price keeps pushing up. So you can obviously tell we went from a bigger bearish channel, bearish downtrend, and started shifting to a more bullish uptrend as we started making higher lows and higher highs, breaking the previous resistances.
And just a reminder, you can draw these, and we recommend it starting with the bigger time frame. So maybe the daily.
Yeah, absolutely.
And then just going down into, so for day traders, we're going to go down into these smaller time frames, but swing traders will just typically look at a weekly and a daily.
Mm-hmm. Yeah, and I think how Kristen and I do it, for me, I go look at the daily first, just for like really big support resistance levels. Sometimes even the weekly, if I'm looking for like a massive bounce or massive rejection. And then I'll just be aware of that level. But I primarily will hone in on either the daily or the 4 hours, sometimes just the hourly, and then look for day trading levels based around that, draw some trend lines, some fibs to get high probability entries for either rejection or bounce, and then look at the 5-minute and the tick chart to identify the entry once price reaches those levels. Look for the confirmation on that. And I'm sure you agree, Kristen, but we always assume a trend is going to continue until it's obviously confirmed that it has reversed.
Yep, every time frame.
Don't want to fight the trend. I've lost plenty of money trying to do that, and it's not fun. Just whatever way the trend is going.
That would be called counter trend trading. And there's a lot of people that do it, and they obviously do it well, but it is trading with the trend is the best.
It's easier when you're a beginner. Over the years, I've learned how to become find good counter trend setups, but it's kind of like something that takes a lot of experience, and you need to be comfortable doing it because.
And you got to jump in soon.
You
know what you're looking for.
Exactly, and you got to take profits super fast and have a tight stop. It's either going to work or it doesn't. But we don't want any beginner traders taking counter trend trades. You should be trading with the trend. And we're going to talk about certain strategies that you can practice. So there's a lot of chart patterns, but these are our favorite. We have the pennant flag, which is continuation. Continuation to the upside or downside. The up or down channels, obviously you're trading the trend in that case, and then when it breaks the trend, you'll be able to quickly see that, okay, now we went from, in that particular chart, went from being bullish to bearish because we just lost the lower trend line. And double tops and double bottoms, we previously had this happen this week, where in the overnight session, I believe ES and NQ double bottom that gap down level that we had on Sunday, and we bounced, which gave us confidence to trade long. At least I think it was on Thursday, at least buy the dip without seeing significant selling coming in. So let's look at the chart pattern. Let's see if we can find, I might need your help to find some of these patterns, but it might just pop out
Okay.
right
What's
in
it?
front of me.
What's the first one you want to do?
Let's find some pennant patterns.
Okay.
Even in so what a pennant pattern pretty much is, let me find one first.
I was going to say your screen is just black. There we go. It's up.
There we go. Let me get rid of this stuff. Volatility makes the price action crazy looking. That's why in today's market, you really got to trade based on price action and what the market structure is looking like. A lot of people's strategies won't work.
Look at Wednesday morning right there. Go to the right a little.
This kind of looks like a flag right here.
Yeah, I'm kind of seeing that one on Monday and then another one on Wednesday morning where it flagged out. Is that the 5 minute? 15 minutes. So it's probably
15 minute, yeah.
Yeah, so it's probably almost an hour to make that before it broke down.
I mean, you kind of see one here. This one didn't consolidate as much. Usually you'd see like at least another candle oscillate in there, but the higher low or the lower highs and the higher lows at a resistance, like in this case, it's a bull flag, usually means that we're consolidating to push up higher. And you can see the breakout happened on higher volume. See here,
You'd see that better on a 5 minute, probably.
Yeah, most likely. This isn't the best flag that I see, but let me get rid of this annotate thing. It's annoying. Let me clear that. 5 minutes. There's probably a bear flag somewhere in here.
Yeah, that's the first one that catches my eye because you can draw it from the other side at 9:30 in the morning.
Oh, like right here?
Yeah, actually, and then we're not that early. I mean, not that early, but yeah, I see a few of them. Look at, there's another one around 11:30. Do you see that one? It's like 6 candles long.
Oh yeah, here's a flag. Here's a bear pennant pattern. More or less looks like that. And it's consolidating right under the used to be support right here. Can't get back above. Let me zoom in a little bit. So what we have, we're in a major downtrend, but we started making higher lows, right? And higher highs, and then eventually we lost this guy right here, and that became resistance. And we formed a flag, and that's a continuation to the downside. And you can see the volume on the downside break was significantly higher. It was relatively higher than the past few candles, which means that the down move is confirmed, or we're more likely going to go lower before we go higher. And what do you know? Look at that, a doji reversal candle. And I'm sure that aligned directly at a support if I were to zoom out.
Morning star.
Yeah, that's a morning star reversal. I lost the doji. Where did you go? Okay, there it is. I see it.
There's a couple of them in there too.
Trying to zoom out. I'm sure if we draw a line there, 7,400. Yeah, well, 7,400 is a mental number. Psychologically, a lot of times those big even numbers act as support because we're humans and that's how we think. Not to say that to be joking at all. It's just, it's part of the whole mass psychology of the market trading. So that's a bear flag, and you'll see it if you flip it on its head where we break above resistance and we consolidate and form that triangle pattern. We'll eventually break up to the upside as long as we break out and close the next candle that breaks out of the trend line closes outside of the trend line on significant volume. We're going to have a continuation move higher. What is the other? The other one is just a channel. We see channels everywhere when we're trading. I'm gonna go to the tick chart. This is usually what I trade with next to my 5-minute chart. You can see the market structure a lot easier in a tick chart compared to a time chart. So if I were to zoom out, here's a down channel. Clearly you can see the down channel here. There's a lower trend line. And as price makes new lows and stuff, you can start connecting this. And now it's forming a down wedge, which eventually breaks up to the upside. That's one of my favorite patterns to trade as well. But how would you trade that? This is a false breakout. Hold on, let me hide this. Go to the 5-minute. Actually easier to draw here. It's kind of like a down channel, a little bit of a wedge. You can kind of see the reversal here. This would be bearish, but look at the, if I zoom in, at the bottom of this channel, we have a hammer candle that formed. So there's a high probability that this might actually be reversing here because the volume is up a little bit. This is around 11 o'clock my time, so that's what, 2 p.m. your time, Kristen, and Eastern Standard Time.
Mm-hmm.
And you can see we broke the like the bearish structure, because this actually was previous resistance, broke significantly above it on good volume. So there's a high chance that since this candle right here, this one right here has more volume, that it's probably going to hold as support. And it tested the low of it, and we held, and we bounced back up and made another higher high from this candle. So you ask, okay, so once I see that, how would I know to get in? You could either enter on the open of that candle or the low of the candle after you see this clear break of the downtrend and the market structure shifting to the bull side on bigger volume. And your stop loss would more or less be what the entry, it could be like 5 to 10 points right there. This would be your entry. That could be, these are two possible entries. One has more risk, but in case it doesn't test the more conservative one, you could enter where this candle closed and where this one opened on this increasing volume with a target back to here. So that's like I don't know, that's like a 4-hour trade, but that would be the first target back to here. That's kind of how we trade price action, and looking at those chart patterns too. And then again, I always come back to market structure. Just paying attention to, we're making higher lows, higher highs, lower lows. And then paying attention to the candlestick pattern in relation to how much volume it has relative to all the candles before that, right? This is more of a discretionary raw type of trading, but I think maybe we should talk about using some indicators, huh?
Yeah, what's next here is just, I think the strategies is pullbacks, trend lines, EMAs. You want to just hit on any of that?
Yeah, one sec.
Okay.
So trading
Okay,
strategies.
so we're just wrapping up. So he's going to finish up on some trading strategies, and then I'm going to talk very briefly about trading plans and just give you some general examples, because we have a lot more data outside of this webinar that we'll be happy to get in your hands around like trading plans and such. And so we'll be just wrapping up after that. I know it's gone a little long, but it'll be worth it, because this is the nit and gritty of like reading charts and discussing the strategies of entries and exits for sure.
Yeah, totally. So we'll talk about pullbacks. So the strategy pretty much is, you have to be able to identify what your support and resistance is, what's the current trend, and you're more or less waiting for a price to break above resistance, then retest it, or you're waiting for price to break below support and then retest it to get in on the trade. Your assumption is that, okay, once price breaks above, you should have a retest to continue higher, and same thing when price breaks below, we should have a continuation to go lower.
Which basically, I was going to say that last trade you just described was basically a pullback.
Yeah. Almost every trade is a pullback, I would say. Because when we're trying to buy the EMAs, which we'll also talk about, you have to wait for a pullback because price usually is extended from them and you have to wait for it to test them. So this is Friday, so I'm covering, it's a very bearish example. So first we're going to draw our trend lines. There's our higher lows, higher highs. It's more like an up wedge that we have, and usually this breaks to the downside. So what we would look for in this case is if this trend line didn't hold, we'd really actually want to see this candle hold. Oops, just drew that on accident. You'd want to see this candle hold right here, the 75.98 half.
After the break of the downtrend?
Yeah, like you'd want to see that level hold, that price level hold, or you want to see this trend line hold. You don't want to see it break and close out of it like it did here.
Okay.
So once this candle closed here, you can look at the volume, and there's a lot of volume came into the downside, and we're actually below this low, or consolidating below and above it right there. So if we look, I don't know if I would take this first trade because we want to see it actually break this low here to confirm the downtrend, which we did. So you can see that the structure is shifting downward. And what I would look for, let me circle it. Actually, I'll just use the oval here. You'd want to look for a retest on this trend, on this line right here, aligning with this low of that candle. Because look how much volume came in on this opening drive candle. So you're pretty much, it's a retest of the market's low, on the opening candle's low, because this is 6:30, I believe, which is 9:30 Eastern Standard Time. So we broke the low on the opening candle. Kristen will probably be up here waiting to short it around the wicks of these candles. So somewhere in here, you're going to look to short it, and your stop is going to want to be more than likely either above, if you're a little bit tight on the stop, it could be above this candle, or it could be above this candle. I like wider stops. I'm a huge fan of wider stops, so I'd probably put an entry somewhere maybe at the low of that candle here. You're going to probably, every trade you usually take some heat unless you are lucky and get the low or the high tick, but usually you're going to have to, you enter a trade, you're not going to be immediately profitable, but you have to give the trade some time to work out. So what we could do here is, this would be stop loss right here. I'm not going to write it, but let me actually just draw. This would be our stop loss above that candle. Our entry could be in this box here, because we came down here and we're retesting where it used to be support is now resistance. And your first target to take profit is going to be back to this line, back to the lows of these candles. And you can see here, once you get comfortable trading and you learn to add to winners, you could recognize that, okay, we just made another lower low. You retest, this used to be support, it's now resistance. Look at this candle. You could add to your position there and move your stop to these candles. And that's simply a bearish pullback trade. They're not going to always look the same. It just depends on what the market's giving you that day. Ray said wider stops give you a higher win percentage but make your losses bigger.
I don't know if they really
That-
lean into a higher win percentage. You'd have to have your target. I'm not sure if I 100% agree with that, but you can have a increased risk with a wider
Yeah,
stop for
yeah.
sure.
If you're gonna have a wider stop, the reward has to match that adjustment. You can't just keep the
Right.
target the same.
Reward, take profit, target, all meaning the
Yeah.
same.
So they'll as you're moving your stop wider, you have to have a bigger target. So maybe your entry needs to be better than. There's 3 things you can change. Your entry, where you're putting your stop, and where you're taking your profit. So the biggest one is your entry. Because if you have a good entry, your stop doesn't have to be wide. But you should give yourself some room, and then as you see in this case, in this bearish trade, as you see price rejecting, you should be tightening your risk as the trade is working. As you're seeing candles come in with upper wicks, you should be trailing your stop down to decrease your risk. So you're not, so if you were to get stopped out and price does reverse to the upside, you're not losing your full risk on the trade. You might lose only half the risk.
So Ray's asking you, what would your target be in that example of that bearish move?
My first
And
target,
where's your entry so I can look at it? Because I know you've talked about a couple places.
let me actually redraw this dude. My entry would be on the retest of this area. I drew a green box for entry.
So you would have put your entry there. So where would your stop be?
Let me get rid of annotate. Stop would be, what's the high of this candle? 75, 82, 75. So I would be using 75, 83. I'll just do like an extra point or so above it. This is the stop. And then the first target would be,
I'm thinking the bottom of that big green trade.
I usually don't put it, I don't put it usually at the wick, like the lows. I'll put it at the open and closes. So probably here is my first target.
So I probably would have put it at that first red line. I cannot read it. It's really small. I think it says 40.75, but I put it a tick below or above it.
Yeah, somewhere 40.75 to the open and closes of these candles, which is around 35, I think.
Yeah, you've got a support underneath that. Was that an opening? I don't know. There's that big candle on the left there.
But the thing is, on this trade, market structure is still bearish. So you would be able to trail your runner to break even at this point on your first once your first profit target is hit. So if I zoom out, get rid of this. The ultimate target would probably be like in this area for me to get paid. Yeah, this is the 5 minute. So 75.15. Because I want to be conservative on my exits just in case it just misses the exit and then it just rebounds and all the profit that I had is lost now. And now I'm in a situation like, should I just flatten or should I just had this much profit. Now you're dealing with like a psychology issue. And you're more likely going to make less profit.
You can see that it bounced and came back all the way back up.
Yeah.
If you didn't take your profit there, you would have been, even if you moved your stop to break even, then you wouldn't have been able to make a profit there. So you would definitely, I like that trade.
Yeah, it's a really, really good trade. And that would be my first target, or I would say ultimate target to take probably all my profit because it's the Globex session low, right? That's the overnight price action low. So you're just trading to the overnight low.
Perfect. Yep.
And you can see the price
all day
continues,
long.
but you could obviously jump back in. But that trade, that risk reward was like, I don't know, let's do the math on it.
Hey, while you're at it, throw the 9 EMA on there since it's one of the things that we're looking at. I want to see if all these pullbacks have been near the 9 because that's on the list
probably are. Let me
of trading strategies.
Yeah, they are.
Oh, that's pretty.
So when we're trending, this is if you can do one strategy well, it would just be trading the EMAs. And I wouldn't say that they work really well when support and resistance break. But when we're in a channel like this, like a wedge, you see how we're just chopping in between them? That's when you don't want to use them. But when we break structure like we did here, when we broke these lows, essentially you could get in a retest on the 9 EMA and the 13 EMA. I'm using the 9, 13, and the 20, the short-term ones. Usually when they cross over, that's an indication. When they cross over to the downside or the upside and we're breaking support or resistance, that's usually a high probability entry for a position to continue the trend in the direction that we broke. And your stop essentially would just be, in this case, you could actually have a tighter stop, but the stop is still above the 50 EMA, which is where the bulls more or less have to overtake again if you're trading the EMAs.
Which happens again down at the bottom.
Yeah, and then you see a crossover down here, and then the bulls kind of took off, and you'd want to probably buy this pullback right here, right there. Because see how it aligns with previous structure, previous tops. We broke above and we're just retesting it. But I wouldn't be taking a trade there because that's the end of the day. But if you do trade the end of the day, that's a clear, easy trade to take with a really tight stop below the moving averages. Let me clean up this chart. That was actually really good. I know you were short on that day, on Friday. On the break of that,
At least once. Okay, so Tony, when you trade these vehicles, it is like equities that the longer it takes the trade to work, the higher probability that it will fail. Oh, you mean, yeah, I can agree with that, totally.
Yeah, you'll hear Kristen or myself say like, if we're in a trade and it hasn't really been working in our favor, we're probably gonna scratch it. And the time frame we usually give that is like 10 to 15 minutes maximum. At least for me, sometimes less.
Well, with this market lately, everything's moving fast. So if it's taken forever, then something's up. And usually it's a report that we're waiting for it to come out. You'll see the volume drop. You'll see we'll go, oh my gosh, nothing's moving. And then we're like, oh, we have a report in 5 minutes.
Tony says the best trades work quickly. I would say, yeah. Because you'll know, at least in this volatility, like Kristen's saying, you got to give it at least 5 minutes, 5-10 minutes. But I have taken trades before where I got wicked in on NQ and I instantly made like 20 points in 5 seconds. And that could be right off the moving average, like buying the 9 EMA, because a lot of traders are looking at these EMAs. So it's kind of like a mass market participant effect.
Well, the algos, right?
And the algos, yeah, that's the thing we haven't really talked about is like a lot of the trading in today's market is mostly computers. So you want to, I always say we're surfing with the bots. So whatever the market is doing is mainly what the smarter bots and hedge funds are doing. And we just want to be on the right side of that momentum. And in order to have a bot, like to code a bot, you need to have some kind of mathematical indicator to be able to give you entries or exits and also be able to look into the order book. And I'm sure they're doing calculations based on that too. But you can see based on the trend, the market structure, and where the volume is going, which way we're more likely going to go.
Okay, so we went through pullbacks, did we hit trend lines? I think you definitely went over trend lines. EMAs, we just did. Let's do pivots and Fibonacci's.
Oh yeah. I personally love the EMAs on the 5 minute. I won't use them on really any other time frame when I'm day trading. That's also something I wanted to mention. So let me get rid of these EMAs. Maybe want to show one more example. I think if you study the charts with these indicators on there and you just do like exercises looking at different stocks, or you're going to trade futures, you look at the Nasdaq, you look at the ES, you'll recognize similar patterns forming. Like here's a huge breakout. I'm sure we caught this one, testing the EMAs, watch the pullback on the EMAs, and just keep riding it up. You know, that's another perfect example of using them. And as it broke above resistance, I don't even know if I can zoom in. Here's another
Tony's,
one. Broke
Tony
above
has
it.
Tony has better setups for different parts of the day. You said
Yes.
days, but
I had
yeah,
a.
I mean,
Do you want
go
to
ahead.
answer it? Oh,
Well, I
I
mean,
had a
we're
slide about
different,
it.
but
I had a
oh, okay,
slide
go for
about
it.
it, but I removed it, but more or
Did you
less
take it?
I took it out. Um, there are the futures markets move are very responsive around other global markets. Like if you trade Globex, you trade the China and the Japan market opens, there'll be significant that's the only time I would look for setups is around that time, and also the London open and the London close. But let's focus mainly on the US market times. So usually out of the gate can be very, very volatile. Unless we're clearly breaking support or resistance, would I jump onto a trade? Because it can be very volatile, and I don't advise anyone that's new to trading or just trading in general, trading the first 5 minutes.
And if you want to use paper
Yeah, or trade one
and
micro and that's
journal
it.
how good you do because you're using fake money. But then if that's what you want to do, you want to trade the open, which a lot of people do. They are sitting there waiting.
Yeah, exactly. And um, usually the first 30 minutes will have a potential trend direction. And then around this, I'm gonna say it at Pacific Standard Time, but around 7 a.m. to 7:30, that's a reversal time frame. It's
So 10
either,
a.m. Eastern.
yeah, it's like 10 to 10:30. We're either gonna have a reversal or a continuation of the trend that we're moving in. And you can see here, 7 to 7:30, 7:30. It's not gonna be exact every time, but you just have to be aware. So we had a reversal at 7:15. So you have to be aware of that, and that's when the bear setup started forming. And then 8:30, I'm going to say it in my time again, but 11:30 Eastern Standard Time is the European market close. Usually we have a pop in the opposite direction of the trend. We'll have a dip, flip, back a dip. In this case, it's a bullish dip, like we're popping up. And then we'll flip back to trend, which we did, and continued down. And this is primarily from the European traders closing out their positions. They might have been short and they might have just been covering here. And why not? Because we're at the overnight low, so it makes sense.
And you can see the volume dying off until like the close. And that's typically why we just don't even, unless there's news events, the most of the action and is predictable in the first couple hours in the morning.
Yeah. And I typically don't trade the lunchtime. The next time frames that I'll look at are from 10 to 11, 10 to 11 or 11:30ish.
Coming back from
That,
lunch.
yeah, it's coming back from lunch where either it's usually another reversal time frame or a continuation more of the trend. And you can see that we just reversed at around 11 o'clock, or this will be 2 p.m. Eastern Standard Time. And then leading up into the close, usually the trend could reverse. In this case, it did. And I would say the last hour to the last 30 minutes is usually the most bullish statistically. But I wouldn't recommend trading it unless you're because the market moves quite significantly in the last 30 minutes, I would say. Like this candle, for example, it's 60 points. If you're
Yeah,
trading
that could have been
mini,
news.
no, I don't actually. It could have been news. Actually, it could have been Trump tweeting something about the chats between Saudi Arabia and Russia with the oil right now. But you just got to be aware of that. I wouldn't recommend trading the close because there's a saying the pros trade the close, and if you're not, it's not for the faint of heart. I would just stay away from it, especially if you're up for the day. Don't trade it. You want to
unless
make your
you,
money the first hour of the market open, and you want to be done for the day because that's the beauty of trading. That's when the best setups are presented to us as retail traders.
okay. So do you
Well,
want to do
we have
fibs?
to.
You want to do pivots? If you do pivots first, it's easy because the Thinkorswim will just toss it on there.
So do you want to explain what the pivots are
Well,
for everyone?
it's just okay. I'll do my best.
I'm gonna go to a longer time frame.
Are there two up there? A little one and a big one? What else am
No,
I looking at?
this is just my, I'm gonna get rid of this. I'll draw it
Oh,
later.
okay. So it's off to the side. So the purple is the pivot on your screen?
Yeah, purple's pivot, then you have
Okay.
your S1s, your S2s, all that.
So a lot of people will talk about these as entries and targets, resistances, supports, and you can see here, and I remember talking about it, and I said we broke that trend where it started going bearish in the morning, and I said I bet you we're coming all the way down to S1. So the pivot basically is the median, and then R1, which would be the first red line, which would be resistance 1, and the second one is obviously R2, but these are an average true range of movement from the past. So it's very similar to some other indicators, but it's very reliable, and that's why I really like it. And a couple things we have is we both use multiple screens, so we're not just looking at one screen. And thank you. And then also, with that said, I watch the Russell on one chart, the ES, which is the SPY, and the NQ, because they're called correlators. And when one starts moving, the other ones will move also. Almost, I'm not going to say 100% of the time, nothing is 100% ever in trading, but 90% of the time. So for example, on this day, Russell, or no, maybe it was ES. ES was starting to, NQ was the stronger one, and ES started moving south first. And I'm calling it out in the room. I'm like, Russ is doing this, ES is doing this, NQ is starting to follow. And I said, I bet you we're not going to stop falling until ES hits its pivot. And that's exactly what happened. It's support. So it came all the way down, hit its support, bounced, and we did the same. So watching the other indicators and the other tickers is important, especially with all the futures, because those are the three ones that are the futures, and they will follow each other on some level. And if one starts taking off, sometimes Russell, you'll turn around and Russell's flying in either direction, and then the other ones will be a lagger, and it can increase your probability for the trade you're deciding on, which is huge. So if you guys want to ever learn about those, setting up the charts like that, just let me know. I can jump on and show you our charts and setups.
Russell. So how do you enter a trade once say price gets to S1 or the pivot? How do you approach that? Do you zone in and start looking at, do we have trend lines or fibs that align here? What do the moving averages look like for a potential bounce or pullback?
Right. So in this example, you can see here, I believe it looks like on Friday, then on Thursday, at similar level, it had bounced before. So that helps with the probability. So you would have gotten up that morning and you would have the pivots, they would already be automated in there, or you got them from some other direction. And so I would have already drawn a support in that area, because I like to draw my supports more sometimes as boxes. So the body and the wick, and then come across. So that would give me an idea. Right. And so I would zoom in. So this is a 30-minute. Yeah. So I would have zoomed into the 5 and into the tick chart, and I won't trade without my tick chart. I just won't do it. So I think you're going to hit on that. Are you going to hit on tick charts?
Yeah, I covered it briefly already.
Okay. I don't know where I was. And so the tick chart and setup would show me my entry and my stop.
Yeah, exactly. So this is probably a good time to talk about briefly why we have the pivots, or at least for me, I usually have them on the 30-minute. or the hourly, like a longer time frame, so I can see the bigger picture to see if those pivot levels or the S1, S2, or R1, R2 are aligning with previous price action. Kind of like Kristen was talking about how she draws her support as a box that connects the candle bodies and wicks and draws it all the way over, and you can kind of see how we bounced here. So if we zoomed in onto the 5-minute, we'd be able to identify a trade setup around that pivot. And sure enough, you can see we made a higher low here. And here's the trend line. I wouldn't actually have taken that trade because I would be at work, but you can see we're on S1 and we have a reversal candle come in here. It's a hammer on decent volume, but more aggressive people would take that trade. But the more conservative entry would be to have wait for this candle to pop up on increasing volume, then buy the retest of this area.
Yeah. It's like a tweezer bottom too. It's almost a no-brainer on that one.
Yeah,
And
and
you
you
can have
want to
a
keep.
pretty.
Oh yeah, like this one right here, almost is.
Mhm.
And you want to put your stop below the low or the high of this candle, just in case it wicks it. Fibonacci retracements are very similar. Let me see if I can zoom out here. I think this is the last one we're going to cover.
It
If you
is.
guys have any more specific questions, like the best way to learn this stuff is to practice it, get familiar with seeing, like for the EMAs, it's really simple to follow. But I think screen time is the best way to hone in on building your strategy that you're comfortable with.
And most platforms have playback features where you can, you know, play it back, draw your lines and say, oh, I would enter here. And some of them let you do that. Like I know Toss does.
Yeah. So fibs is this tool right here. Usually drawing the fibs from the last high and the last low. Yeah, Tony's correct. 10,000 hours to mastery. Could potentially be more with trading. You can see a fit.
Is that an hourly?
This is the hourly, yeah. So
Okay.
I usually draw fibs from the high to the low, like where we rejected and where we bounced to get the potential retracements. And you can see here, classic bears setup is going to test the 50% retracement, then continue down, and that's exactly where we went. So I would use the fibs on a longer time frame to hone in on areas that have a high probability of a trade forming either as a reversal or a bounce. I guess those are both the same thing. So in this case, since the trend is down and we had a pretty big bear sell off and we broke support in this area, the retracement back up will be to test that support. It should be resistance now, which is the 50% fib, which is around 75.43, and the high of this candle ended up being 75.42 half. So fibs will get you really close to potential reversal areas. And if we zoom in on the 5-minute, zoom in a little more, you can kind of see some reversal candles coming in here. Got an inverted hammer, and then you have a bearish engulfing candle right after that. So after this first candle formed, that would be an indication to me that we're probably going to reverse here, because if we look all the way over here, there's a lot of resistance here. That's where we previously rejected. We made a lower high compared to this high over here. Stop would be, again, I wouldn't trade it because it's the close, but just assume it's not the close of the market. Your entry could very well be on the close of this candle and a stop above there. It's like 10 points or so. 1 micro, that's only 20 bucks with a target back down to support here. So it's like a 2-hour trade. I usually want to shoot for at least 1.5 to 2 hours minimum on a trade setup. There's so much more I can cover on fibs, but we absolutely don't have all the time in the world to do this. I actually have another video
I
on
was gonna
Fibonacci. I have another video on
say,
this to cover
yeah,
it more in
exactly.
detail.
And we're coming out with more videos like every month. There's a ton of, I mean, we've covered a lot. But anyways, so what's next? Any questions on that real quick? Because we're going to jump into very, very simple trading plans and rules. I don't see any questions, Bray.
Yeah, Dino's good. If you guys have any questions, you want to chat about anything in particular, we'll go into more detail. We're just trying to be time conscious of everything.
Yep. Hopefully we'll wrap this up here. So moving right along, I don't see any questions. Let's hit the next slide for trading plans and rules. What are trading plans and why make them? I think it's really important to sit back and just take a day or two and go, why do I even want to trade? You know, do you want to have more money for travel? Do you want to build a retirement account? Do you want to give to charity? You know, make a list of all the places you would put the money and put them in order of where the majority of the money would go. But I have on a sticky note right on my laptop of a few things that I want to remind myself every day. So I recommend doing the same. If not, like look at it before you trade every day. What should I do before each time I start this trading
It's
day?
like a morning routine.
Yeah, morning routines are good, and that can be in your trading plan. I do recommend them. So some people journal, some people meditate, some people, I mean, I found on YouTube some very short trading guided meditations. I mean, if you're into that, I particularly am. It's kind of been my journey along the way. If you would have told me 5 years ago I'd be meditating, I'd be like, yeah, well, I was already making excuses back then. So yeah, you'll create different things to like a little routine to get your mind clear and set to focus on what you need to do. You know, and one of the things is for sure, open up all your charts and what are your pivots and what are your trend lines, and just because they can move overnight. You know. So moving along to the next slide, I like to talk about creating this. So if you're, oh man, I've got bullet problems again.
That's okay. I think we covered this already though a little bit.
Yep, but this would be absolutely 100% definitely needs to be in your trading plan. Even though, again, we can go back, and if you have any more questions, he did review it. And then the next slide is more of the same, which really will evolve with time. So let's just say your max position size is 1 micro. You know, after 2 months, you can even put like a comma. And after 2 months of successful trading, I'll make it 2 micros, and then you can make it 3 micros and what, you know, so you can create these rules for yourself. Top Step Trader is when you have a funded account, you cannot trade a minute before or a minute after certain economic releases, which is the big ones. And I highly recommend looking at that, and I think it's a great idea. So we do discuss it in the room. We are big on following these releases. We talk about them a ton. So maximum allowable trades per day. And Brian includes equities too. So that's if you're trading stocks also. And I don't know how you could possibly talk about both of those, but or trade both of those in one day. That would be pretty amazing. And then days and times, I think that's really important. So I had to do that because now I trade 5 days a week in that morning time, but I didn't start there. I started with one morning, and then, 3 and 4 months later, I added another morning. And then I said, okay, I'm going to rearrange my chiropractic. I started coming in earlier just to make up the time that I wanted to have for trading. So I'm Monday through Friday now, and it didn't start like that at all. So definitely can evolve, but everybody needs trading rules, and we even have in the Futures course, we have an entire class just on creating, giving people examples of rules and guidelines for making a trading plan. And then the last one is kind of a fun one. Um, Brian, if you want to move to the next one, it's the money management.
Oh, yeah, that's a good one.
Did you answer that question? I see that it was one. So
Oh yeah, Ray was asking, do
okay.
we consider daily targets for maximal upside? And we do. We use the average true range on the daily chart to see where we could potentially go. But I do have one study that I created that tracks the high and low price movement from the European market open, which is around, it's an overnight open. I think it's around midnight my time, 3 a.m. your time, Kristen, and until the first 30 minutes of the US market open. So it plots like a 61.8 fib extension above and below that trading range to give us potential targets, like one standard deviation move.
Or the closest, or looking at your supports, resistance, and fibs, you can use those as targets too.
Yeah, exactly. Like
Which typically align with all those anyways. It's great when everything aligns. Like the opposite of max drawdown. Oh, target money amount. Absolutely. So it's
oh, okay,
different.
I see. I totally
Yes.
misinterpreted that question.
So did I. I'm sorry. So yes, sometimes we'll be like, yeah, some people had, well, it depends on, sometimes it's been 500, it's been 200, depending on I'm happy with just 100 that day. So this volatility has really created a different mindset, because it's moving in. So because it's whipping so many points, the range in just a 2-minute candle or a 3-minute candle is huge. So it makes a big difference on your stops, and I'm looking forward to it calming down, but it has been a big adjustment for both of us, playing within this new volatility range for sure. So anyways, I hope that answers your question a little bit, but yes, we typically will shut things down. We'll say it out loud at least.
Yeah, I usually shoot for like $200 to $300 a day.
And sometimes if it's
then I'm done.
really choppy and we've just put some money and we'll say something like, I'm not giving this back.
Yeah, like I'll bump
I'm
100
changing.
sometimes and I'll just
Yeah.
stop. Like
Like
it's not
a bit
working.
brutal. Right. Well, and if we have Fed speak or something, it can just get really choppy, and then you can just maybe move to paper and just keep getting screen time. I think that's huge.
Yeah,
Because we'll
exactly.
still be analyzing and still be looking at if for other trades, because if something sets up and starts going, at least you're there. So, okay, cool, Ray. Cool. Okay. So money management, this is something that after a while of trading, we thought we'd add in. It's pretty cool. I mean, I don't think we invented it. We just saw it and we're like, oh, this is really cool. And so Brian's been doing this really cool small account challenge. And I think if you go back on some of his posts, he's been talking about it. I'm in the middle of trying to show that the swing trading in Top Step, the little tiny micro account, they don't call it micros anymore. They call it swing. But now you can only use the micros, but you can't use the minis in this, and the rules are tight. So I'm determined to finish that one out and use it. But the withdrawal schedule is pretty cool. So if you have a starting balance and you go, if you go above that, how much are you willing to withdraw every month or every week? That's totally up to you. But creating a schedule to bring the account back down and to grow the account and pay yourself, it is really a satisfying thing, instead of just sitting there and just watching it change and go up and down. I think it helps you stick within your trading plan and your rules when you drop your account size back down again. I remember when I was doing I had this, I think I broke a really bad rule like a year ago, and then I'm like, okay, you cannot do anything except paper trading for a month. Like I put this rule out for myself, but I kept resetting the account. This was before all this volatility. I kept resetting the paper account to $500, and I kept doubling it, and then I would bring it back down to 500. And that was just a little thing I did for myself I don't even remember why, but I just remember it can be done. It can totally be done with micros and a $500 account. If you just got to really just be careful on your trading plan. Yes, the volatility is great. Yep. So the next one is just final thoughts. I think we're just going to just go ahead.
I wanted to say one more thing about this.
Yes, please.
When you're trading something that can psychologically help you when you're trading your account is to always keep you in the protective protect my capital mindset type thing. So what I mean by that is like as you make profits weekly, always withdraw the money and bring it back to your starting balance so that you still have that sense of caution. Like, okay, I have a brand new account. I need to approach this correctly. Don't do anything irrational, you know, like always follow your plan. And it works really well. You'll start, once you do it once, you withdraw money once from your account and you bring it back to where you started with, you're gonna get in that. You start to build a habit, like really positive habit. You might not realize it until you start realizing that, holy crap, it's been a month and I withdrew like 500 or $1,000 each of these weeks. It's because you're kind of teaching your mind and your subconscious that you need to protect your capital at all times and you need to trade the correct way. And if you do this, you get to keep paying yourself every week, you know. And that's why I withdraw my money every single week. And if I, for some reason, have a loss on the week, I'm not going to put any money back into it. And you have to be able to bounce back from that.
Okay.
So do you want to actually jump into, let's wrap this dude up?
Let's wrap it up. So I think we threw this one in here. He's like, what do you want to talk about? Because I did this slide. He's like, I think we should just talk about random stuff that maybe we didn't hit on before. I mean, I'm going to let you start because I don't know. I think you're just a good speaker.
Oh, you're too kind. Oh, there's so many things I could say here, but you definitely you have to think. You have to work really hard, you know, because you're gonna experience a lot of setbacks as you start trading, or even as an experienced trader, you're gonna experience losses. You're gonna experience things that aren't going the way that they should be going. You got to be super persistent and always be learning from your mistakes and always advancing your knowledge in the markets. Never be content. Always looking to better yourself as a trader, as a person, as a human being, to help others. You just got to work hard. Screen time, study, nights and weekends. Be consistent. You can't do this for like a week and expect to get results.
I like that.
You know, it's going to take time. It takes people in college like 3 to 4 years to get a degree. To be an engineer or to be a doctor, it takes a lot longer than that. And you can't expect as a trader to be making millions and thousands of dollars the first month. If you focus on just making good trades and don't care about what the outcome is, if you just focus on the process of what you're doing and get in the habit of doing it the correct way every single time, the money will come. Promise you. And yeah, Tony is correct. It's best to journal your trades.
Or journal your day, or the software we've been using will journal our trades for us and give us percentages, and we can kind of look at that, which saves a lot of time. But where was your mindset when you woke up? How was the day? Was it choppy? Was it Fed speak? You know, and was there a tweet? I mean, all that can make a difference in looking back. I 100% agree with the journaling for sure.
Like, when do I do well? Like, statistically, when are my best days? When are my worst days? If Friday is your worst day, which it is for me, don't trade Fridays.
Just trade paper.
I
mean, yeah. I mean, you're getting screen time, right? I have a rule that says don't trade in the afternoon. I have the worst win rate after like lunch. It's so frustrating. I'd really like to break that because I feel like that's just a mindset that I'm trying to get over. So if I want to trade in the afternoon, I really should be paper trading. That way I can figure out, what am I doing wrong? I think it's just a volume volatility thing and maybe being impatient. But, you know, that's the whole thing I think with trading is you have to want to learn. And like Brian said, this is kind of like putting yourself through school. It's totally doable. I think personally, you either know what kind of, if you like trading, you know, and then you'll figure out what kind of trader you are. So you have not just your strategies that you like, but are you a day trader? Maybe you don't like it. Maybe you just like the swing trade. Again, don't forget about where Brian has been posting the swing trades. Having a growth mindset, I think, is huge. So I did that whole trading psychology course, and developing a mindset and analyzing the current mindset you have isn't an overnight success. That takes work also. But the main one, I think, for trading in specific is having a growth mindset. I'm a huge believer in looking at the top 5 people and the people you hang out with the most. Surrounding yourself with like-minded people, and they don't even necessarily have to be traders, but people that are positive and supporting you and not going, oh, you want to learn to trade? What do you, and then just like, no, I don't want to hang out with you. And so cleaning up your social environment and who you're hanging out with will definitely help you in your trading. We also like to reiterate, we want to help people learn to trade because it's a constant evolving. We are constantly learning. We're trading, learning, and living every day. That is our motto at Price Level Trading. We do not spoon feed exact detailed entries and exits, but you can see why and how, and this is how we talk in the room. We go, okay, well, we see this pivot and we see this support and we see this Fibonacci, and so we do the call outs, and so people are looking sometimes for call out rooms. I've sat in those rooms.
Totally
I
advise
don't know.
against it, because you're not learning how to trade, you're trying to follow someone else, and that's a lack
You're
of
not,
ownership, a lack of taking responsibility for your results, and you will never, it doesn't work. You have
well, you're not going to learn. I mean,
You're
you
not
can
going to
make
learn
some
that for
money.
sure.
Yep.
You can, but as soon as the psychology component comes in, I always see posts for people doing this. Yeah, this person's room is really awesome. I did really well the first 2 weeks, and then I got greedy, or I did this or that with the position, went in too heavy, and now I'm down like half my account. So the best is just to keep learning from people that know what they're doing, and just be a part of a community that care about your success and care about you actually doing well in this
Yeah.
industry, because it can be lonely, because there's not a lot of people that
Get it.
get it, yeah, I would say, and that are willing to help and like drop everything and not charge you, because we don't, if you guys had like a serious issue with trading and want to talk, we're not in this to like make a lot of money. We actually just want to help a lot of people, because we make a lot of money from our jobs and from trading in general, so we're not greedy people. We want to help make a difference in the world.
Yeah. And that you were talking about just learning and putting the screen time, but that really, you're going to make your rules and your trading plan, and that will evolve. Like that rule with me not trading after lunch. That's why your rules and trading plan is not going to look like mine, but the course, the one that we talk about trading plans, is so much data, and you could pick and choose out of that what works for you and what you want, or add it in there and take it out in 3 months or something like that. So that's kind of
Totally.
my final thoughts on all that. But yeah, we will totally, and we do, we talk to people like, and we don't mind that. I mean, we both enjoy it. I think it's just our personalities
Yeah,
and
totally.
helping.
Do you want to cover quick? I know Brad has to get out of here. He was
Yep.
asking about the special that we're gonna run. Do you want to cover it, or do you want me to?
I just really wanted to figure out how to help people that are just maybe struggling right now, or we just reduced our fees, and we did it for 90 days, and it's pretty self-explanatory right there. I mean, just for the $26.99, which is usually the 100 for everything, because you're getting the course, you're getting the room. We do have a lower fee. Brian, what's the lower fee just for the room?
It's $50 a month.
Okay, so that's just the room, but to have the room plus I think it's a lot more one-on-one coaching. I mean, it's on their website, and then the ability to have the futures course, there's an upcharge for that. But you can see here for 90 days, it's basically everything that you could possibly want out of Price Level Trading for the $27. And we're pushing it for 90 days from now. Yeah. And Brian's got it set up because he writes code. So he invented that. I don't know how to do all he does the Shopify stuff, but and we're going to send out a recording for this. We'll just edit it and clean up the bathroom break or something and make sure everybody gets the recording of this.
Totally, yeah. And we'll send all the information in the email with the recording of this video, so you guys have all this stuff to digest and refer to again.
Cool.
So let us know. I think that's it. If you have questions, if you guys haven't followed us on social media, check us out. YouTube is going to be, we're putting a lot of videos on there. We have the Fibs video, we have risk management videos. We're just going to continue to add more information. to help
Yeah.
as best as we can, you know.
Yeah, we want to get better and we want to help everybody else. So, and be fun. We want to be fun. We're goofballs. So we're trying to be serious, but all in all, we're trying to be normal peeps.
Trading should be fun, you know.
You're welcome.
Should
You're
enjoy
welcome,
it.
Ray. Thanks.
Thanks,
Thanks.
guys. Let
Appreciate
us know
it.
if you have any questions. If there aren't
Yeah.
any, then I guess we can wrap it up and continue our
Cool. Yeah.
quarantining.
You can, our cell phones, listen, no kidding. Our cell phones are directly to us. Our emails are directly to us. So whatever you guys need, let us know.
Awesome, guys. We'll be in touch. We'll send you
Go
those
enjoy
links
your
shortly.
Saturday. Whoop, whoop.
All
You're
right.
welcome. Thank you. Talk to you later.
Oh yeah.
Oh,
Let me post
Brad.
that really quick.
Okay.
Let's do. Oh, that's my
I think it's contacted.
priceleveltrading.com. Let me just write it in there. That will go to both Kristen and mine's individual email. Make sure I spelled it right.
Yeah, we just both get copied on it. Yep.
Yeah, we'll both get that email.
Okay.
And our cell phone numbers are on the website too. So if you want to text or call us, whatever, just feel free to do that. All right, guys, have a wonderful day.
Yep. Talk to you later. Bye.
Bye.